So markets have tumbled, down 2.8% on the Nasdaq. Bitcoin down almost 2% after a shock. Jobs report shows that the US labor market continues to hold up strongly. What does this mean? What we can see here, as you can see, guys, 260,000 new jobs created, 263,000 versus an expected 250,000 projected number of new jobs, which is showing that the labor market is not just healthy, but really strong. And Jerome Powell needs to press on with his rate hikes. As you can see here, we can head on over to the Fed rate monitor tool, and you can see that this has spiked up since the reading. Now 80% of the market expecting a 75 basis point rate hike. Remember, this was much lower. Many people are thinking maybe the Fed's going to pivot. Maybe we're going to see 50 basis points. Now it's all dead on here that the markets are pricing in another 75 basis point. Jerome Powell still has room to do work, and interest rates can continue to climb. The market is now pricing in a much higher terminal rate, closer to the 5% range now. Before that was sitting at 4.25 and then 4.5. Now the market is expecting him to get as high as 5% on his interest rates, and this labor market is just not weakening. Remember, in the last few meetings, we saw Jerome Powell start to speak less about inflation and more about wages and more about the labor market. Remember, we spoke about in previous videos this wage price spiral concept and how we need to make sure that the labor market remains weak. Otherwise, wages are going to keep going up. That's going to continue to fuel inflation. So we've seen that happen. Let's take a look at the breakdown, and then we're going to take a look at the Bitcoin chart to see what is going on and what are some of the opportunities in this market. As always, don't forget to smash the like, subscribe, check out BYBIT or BitGET if you want to take any of the trades, which I'm going to share with you shortly. Now, it came in at 263,000. The prior month's reading was 315,000 in July. Okay. Now, the other thing to note was unemployment rate did fall. It fell to 3.5% from 3.7. This is the worrying thing. They want unemployment to increase up towards that 5% range, but it came down to 3.5%, reminding us that the job market is healthy, and what Jerome Powell was expecting to happen isn't quite happening. So more negative news here on the macro front. If we take a look at the average hourly earnings, that came in at expectations, 0.3% month on month as expected. The average hourly earnings plus 5% year on year versus 5.1%. So not a huge fall here, but it did meet expectations there at just under 0.1% below expectations. So that's better. Average weekly hours 34.5 versus 34.5 expected. But the headline, which is what the markets are reacting to, is the fact that more jobs were created and unemployment has fallen. That is what's leading here. If you head on over to CNBC, that's what they're leading with, right? That's what they want to focus on, is that the unemployment rate falls when it should be rising, and the number of payrolls have increased when they should be falling. Now, what we they didn't meet expectations. So what we want to do here is now take a look at the US markets. You can see that the Nasdaq is down 2.75%, 2.2% down on the S&P, 1.6% down on the Dow Jones. Volatility index has spiked up 3.47, showing that there's a lot of volatility in the market. You can take a look at the US 10-year spiking up now slightly, getting back to that 3.9% after a dip here intra-week, taking us as low as 3.6. So people are flocking back to this US dollar. We can see fear and greed index is sitting at 23. This doesn't account for the jobs figure, which we've just seen. This would have been taken slightly beforehand, but what we want to see is this big candlestick on Bitcoin. And again, hate to say we told you so, guys, but even in my video this morning, what did I speak about? You can go watch it. I spoke about this M pattern. We spoke about it yesterday as well. This M pattern, this double top pattern here at the top where we got rejected by 20,300 has led us to the downside. As you guys know, I personally don't short. If you guys shorted this, congratulations, you've made a good earning there. And what I now say is, you saw that I drew this trend line, right? This trend line is the next level we need to hold at. You've got your low, you've got a low, and we need to post this other low. So can we rotate? If we rotate here, it's a nice position to go low, because then what we're doing is we're creating this symmetrical triangle, right? And we still want to break out from this level. Worrying is if we do not hold this level. If we do not hold this level and we start to come down to test 18,700 again, that is where I'm going to be worried. We've tested this level numerous times, and remember, the more times you test a level, the weaker it becomes. And since June when we fell to our lows of 17,600, we have been testing this level successfully, but I don't want to go down and test it again. If we go test 18,700 again, all bets are off. We could be falling to 17,600 again. So I really want to see some strength along this yellow line, but this jobs figure is not going to help us. Why? because it means Jerome Powell's going to continue to be aggressive. He's going to have to continue to increase interest rates. And you can see the dollar index is reacting really positively here to this. And again, we sound like a broken record here, but it's exactly what we said. Loads of people were getting excited on the down leg. And what did I say? Wait for this. The dollar index is going to bounce back strongly. And as you can see on the daily chart, all it did, like we continue to say numerous times, was it's bouncing off its EMA ribbon, guys. This is really important. Please do not get excited in these downward legs. Who has the trend? In this whole, you have to zoom out. Who has this trend? It's clear. It's from the bottom left to the top right, right? The dollar index is in a power trend right now, and it has been. If you zoom out, it's been parabolic on the dollar index, right? So to bet against this would be silly, particularly when it hasn't lost its EMA ribbon, and that's why it continued to exercise caution. Yes, Bitcoin had a little bit of a move. That was only because the dollar index was cooling off, and now you can see the dollar index is bouncing with vengeance here from its EMA ribbon, looking to go past its its peak here at around that 114.2 level. So we're going to continue to monitor this. If the dollar index continues to show strength, like we know, this can mean more weakness here on Bitcoin. So I'm expecting lower price points here in Bitcoin. Can we hold that yellow line and build some support? That's going to be the key crux of the matter right now. As you can see, Bitcoin getting rejected from its daily EMA ribbon. That's the daily EMA ribbon there for Bitcoin, and that is where it's getting rejected. So you had your nice run up. Everybody was getting excited, right? Chasing these green candles. But again, you've not beaten your EMA ribbon. You've not regained it and come out the other side. Therefore, there's no reason on the daily trend to be bullish, right? So we're getting sent back to the downside. Now, if we can keep our higher low and go work our way back up and maybe come back down again and break through this level, then we can reclaim our EMA ribbon, and that's far more of a bullish sign that we can work our way up to 22,000. But for now, the bias has to be with the bears. If we don't hold this yellow line, I'm expecting us to come and test 18,700. Things are not getting better in the macro economy, and that is the worrying sign right now. However you want to look at it, things are not improving. This is the non-farm payrolls. Yes, they've come down from 350 to 263, but it's not as expected. The labor market is still stubbornly tight, which will mean inflation will continue to be entrenched in the economy, which means Jerome Powell has to continue to put the noose around the economy's neck. So how are we going to run? We're not going to run. So we need to see that improve. We need to see Jerome Powell really start to get control of this. And that, for me, puts a nail in the coffin of the debate about whether we're going to have 75 basis points. I always expect another 75 basis points, and you can see the market is voting to the same as well. 80% are backing the idea, this notion that we're going to see a 75 basis point rate hike at the next meeting. Important to know, we will get a CPI reading before November the 2nd, so Jerome Powell will be armed with this non-farm payrolls, as well as the CPI reading going into his decision of whether to do 75 basis points. But more importantly than just the 75 basis points is now this notion that the market is pricing in that we could have a terminal rate closer to 5%, not just 4%. So the fact that Jerome Powell is not going to pivot until at least 5%, which means we are in this tightening cycle for longer than many people had expected. Let's also take a quick look here at the US 10-year, and you can see the US 10-year doing exactly what we expected, bouncing off of its EMA ribbon and showing some strength again and again. These things are inversely correlated to Bitcoin, and as long as these things are showing strength to the upside, Bitcoin cannot get any momentum to the upside. So I'm continuing to keep my bearish bias outlook on Bitcoin. I'm not chasing green candles. If I see good prices, I will be accumulating them. And that's all I'm doing right now. I'm not getting excited about these massive pumps back up to 30,000 or whatever these other moon boys are telling you. I'm just following the data, following the macroeconomic data, following the issues around some tensions in terms of what's going on with the UK, what's going on with Russia, Ukraine, what's going on with inflation in the US. We have to monitor all these things, as ultimately these are the things which are driving the direction of the economy and therefore where Bitcoin is heading. So there you have it, guys. There is an update on the critical jobs report we just received. Things aren't looking great. Things aren't trending in the right direction, and just reminds us that we could be in this mess for a little bit longer than previously expected. But we've got to look at the positive side, and the positive side is we get chances to continue to accumulate Bitcoin at some amazing prices. And if we do head back down to that 18,700 level, and particularly if we lose that level at 18,700, I will be accumulating a lot more aggressively. I've had plenty of opportunity within that 19,000 to 20,000, but I'd love more of an opportunity below that 18,000 level. I think that would be some amazing price points to be buying in at, and that's what my focus is on right now. Make sure I've got enough cash on the sidelines that if we do get that quick flush down, I want to make sure I can pivot and get some purchased with some limit orders at those levels. Hope you guys enjoyed. Don't forget to go watch this video here, and I'll see you in the next one.